Hello, guys. So I want us to look back on this past week from the 14th until the 18th. So I'm just gonna review all our trades and see where we made mistakes and where we can improve. So the first day, this is the trade that we got. As you can see, we secured a massive move here. So I'm gonna just go back to where it started. So okay, I guess I came onto the charts late. I don't remember what was happening. It was on a Monday, right? Yeah. So this is how I analyzed. I just came in and we had this downtrend already marked out, and there was this. I just marked out this uptrend, and I remember that this one here, this what do we call it? Ascending, ascending channel. I just placed it here because I saw this double bottom here. Obviously, this is on the 15 minute. So on the 1 hour, it would look like a proper double bottom. So I saw that the market came down to this level. So I just thought, you know what? There's no way that the market is gonna make it past this level. So I just did that. And on the 5 minute, this is how it looked. Okay. So I guess the market started moving and that's how it shot up. And as you can see, I adjusted the ascending channel, and that's how the market just moved. On the 5 minute, it is easy to see that the market was actually trending up to the upside. So that's what happened. As you can see, we hit our TP and the market just extended. So this was more like a 200 points from 480, I think, up to that level there, which is 115, 167, 170. So that's how we killed. That's the trades right there. Okay, so on Tuesday, this is what happened. So as you can see, the channel continued to extend, and on Tuesday, this is how we started. Uh, Along the way, so this is on the 5 minute. As you can see, we are still in an uptrend. That is how we caught that level, and I also included this horizontal ray here to show that this level is actually s- uh, it was support, then it turned into resistance, then it got broken, now it's support. So that's where we took our entry right there. So on this day, I didn't get to take too many screenshots because, as you can see, I came on early onto the charts. It was around 1 o'clock when I started analyzing. As you can see here by the clock, it was 1 o'clock in the afternoon. It was not exactly at 3:30. So what happened at 3:30 is that the market just continued to the upside. It touched the moving average. It almost hit our TP. It moved like 95 points to our TP because we are always targeting 100 points. As you can see with this trade here, the market just went hit our 100 points target, but it was still under the moving average, so it moved to the downside. Even on Tuesday, that's what happened. The market just continued to the downside, but as you can see, this block here acted as an order block, so the market just got trapped there, didn't go past, didn't get past that level. This is the following day, Wednesday. I guess this is how it started. This is my analysis. So I only analyze on the 15 minute. On the higher time frames, I just go there to confirm the trend so that I'm not too biased. So I only look at the small trends on the day because I'm a scalper or a day trader. You can say that I hold my trades for a few minutes. So this is how we caught this trade here. as you can see. Now I want you to see something. I was able to attack. I was able to get into this trade because of this uptrend here. I got into this trade because of the uptrend. Now, because of the market didn't break the moving average and continue with this uptrend, the market did not continue to the upside, which is like 15,300. It didn't get to that point. So I saw that, okay, on Wednesday, I just saw that the market was continuing to the downside. So I marked out that this is okay. This is a downtrend within this major downtrend. So the other thing is, you remember, I placed this horizontal ray here, which acted as a support. It got broken a few times, then started acting as resistance. So this entry, if I was in the market earlier, I would have gotten it at this level. So let's just see. I was able to get this one because I remember it was a very complicated day. This one, damn, I took a lot of screenshots, as you can see. So bear with me, guys. Okay, is this one? What is this? I don't know. This tracer went from when. So I came in at it was around 12 to 1, 2 to 1, 10 minutes to 1. Then I saw this. Okay, I don't know. I just placed this position here, but it does look like I was right for a moment there. The market just pushed because I saw that the market was making these touches, and this was like the fourth touch. So I just thought, nah, the market is gonna break this ascending channel. So that's what the market did. But then I identified the support actually. Then I came in with my block and I said, nah, the market is just playing with me right now. So we went down to that block and look at what happened. Played around that block. So these are just on higher time frames. I like to look at the higher time frame to just confirm what's happening. As you can see, the market broke that block. But usually this happens because of a few things. Because this is before 3:30. Nah, this is exactly at 3:30. I caught this trade before 3:30, right? Usually, what happens is that the market will trick you into believing that this is the direction for the day. So it moves really hard. It moves massively in a certain direction, but it's just to fool you. Then at 3:30, what happens? The market goes back. For those who said, there are those who like to uh, what do you call this, you trail your positions. So most people would trail their positions, move their stops. So at 3:30, this is what the market did. Boom, as you can see. Now look at what happens. The market goes down, comes back, stays within this uh, major downtrend. And this downtrend, I'm gonna show you that why it's so relevant. So the our position was still alive because now we did not move the stop because we know at 3:30 usually what happens, the market just collects before moving in its uh, direction for the day. The market just goes up to collect and collect. So look at what happened. The market went back into that ascending channel to confuse a few. Now I adjusted the position. We did not get our stop did not get hit. I just adjusted the position because it looked messy. Mostly it was for aesthetics, but on this on this one here, it was about 4:30. Usually, what I do, if the market has not reached my 100 points yet and I'm not stopped out, usually I look for a better entries around because I start I look at my half past three, and I look at half past four, and I look at half past five. Sometimes even up to half past six, if the market is just playing around. Beyond half past six, I just get out of the market. I usually just wait for the market to make its move. So at half past four to nah, this is at 5 o'clock actually. That's when I adjusted my position and I entered a better position. Cause you know what? When you are in a position, you are holding a position like this, you went into profit, now you are back, it's in the negative and now it's in the positive, and it's just playing around your entry level. The best thing to do is get out. Look for a better entry. That's what I did. Now look at what happens. On the 5 minute, we are back at that block. That block holds no significance. Look at how it just gets broken. Boom, boom. Look at what the market does. Look at that. We destroyed we destroyed just by looking for better positions. But even that first entry was still legit. The stop loss did not get hit. But when the market is playing around, I lose my patience. So maybe you should also adopt that style. So this was on Wednesday. Let's look at Thursday. Thursday we ate, as you can see, we destroyed again. Now let's see how we caught this one. I'm just reviewing my trades, so I'm not gonna explain a lot because I'm not trying to expose my strategy for free, guys. Uh, so this was around, yeah, I remember this one. I came in early also for this trade. Maybe I went too far back. As you can see, the market was in an uptrend. So this is the open, went down, came back to that open price, bounced around this strong support here, went back. Now I placed my block here because I thought, okay, but I actually played myself because usually between, as we saw with the previous trade, uh, between an order block and a support level, because these things are two things that are not the same. They look the same but they are not the same. We have order blocks and we also have like support and resistance. What you should always give priority to is your your support and resistance before looking at your order blocks, because order blocks are just for manipulation and all the other technical stuff for bigger guys to collect liquidity. So I identified the block because I saw that, okay, we pulled back the previous day to this level, then pushed further to the downside. So I thought, okay, that means this support here, this level was very strong. And then I looked at these levels too. We came back to the block, we touched it, then pushed to the downside. What I did not pay special attention to was that this uptrend was very strong. But then I went ahead and I placed my position at half past three. So this is earlier on at half past one. I was just watching, as you can see, the market jumped. So half past three, next screenshot. God, Jesus. So at 2 o'clock, the market jumped back to that level, as you can see. So I placed my position there. I thought, okay, maybe this is an early entry because this level is acting as a strong resistance. So I just went in, but look at what happens. Usually, when you enter before half past three, expect half past three to be like crazy. And as you can see with this one, my stop loss is 1:2. With this one, my stop loss was 1:3. This one specifically, actually, because this one I extended it because the market went beyond my TP. So this one is a 1:2 because I know that whatever you do, don't underestimate the volatility and manipulation at half past three. Look at what happens at half past two actually, because I remember it was jobless, the jobless event, economic event. So that's what happened. So I moved my position to that level. Even though we did not hit stop loss, I just adjusted my position because, guys, finding a better position is better than holding on to a losing trade. Never hold on to a losing trade. Please, never, never do that to yourself. So this is what happened. Now, as the market was uh, pulling down to this level, I thought maybe this block now will act as a support. But guess what? But this does not mean that I got out of my cell because I was still in profit. So I was just speculating. But around 3:30, I just said, "Nah, fuck. This is a sell. There's no way. Look at what happens. Look at what happens." And I want you to look at something specifically here. The moving average I use is a specific one. Maybe you can see it on the screenshot, but if you are not, if you have your eyes, if you don't know what to look for, you'll never know. If my moving average, my moving average is always telling. So at this level, the the price closed below the moving average. If the price had closed above the moving average, I would have been skeptical of this sell. But then I held on to it. I gave it as a low probability setup, by the way. But I want you to look at what happens. This is on the 1 hour. Look at how beautiful it looks on the 1 hour. Went up. This is like a impulse correction. Look, you'll see actually how this trade ends up. We hit TP. Look at what happens. We broke this level. Look at what happens. We are now breaking out of the 4 hour channel. Look at what happens. I like how it pulled back. Boom. We went below that level and then it pulled back. I guess I saw this buy. I thought it was gonna like be a massive buy, but it came back into this level. Look at what happened. So this was Thursday. Nah, this was Friday, right? Oh, why am I messing up? The 18th. Nah, this was the morning. Oh, this was the morning of the 18th. So that's how it ended. So Friday. So as you can see, all of these trades were in this specific downtrend that I identified earlier on. It was on Tuesday. This is the downtrend here. This downtrend became the downtrend for the whole week, right? Look at Friday. Friday was also a messy one. I did not actually hold on too long to this trade. Uh, I came in early. I saw this market coming to this level, and I thought, you know what, we just might bounce at this level. But what happens? Nah, because this is before 3:30. Remember, boom, we broke out of that this specific downtrend here, descending channel. We broke down. We broke this support, but it did not actually support anything. Came to the support of the channel, and that's the support that we respected right there. But the price played around. I even got load shedding around this time, so I continued trading on my phone. Look at how this trade played out. We hit our TP and it extended back to that other block. So that's how we played out. This how this week played out for us in the 1530 Nas 100 signals group. I hope you can take some notes from this, but if you want more, get yourself the 1513 as 100 strategy. It's only $60, guys. I'll be increasing the prices there as time goes because now I'm looking at developing other strategies for currencies. Right now, I'm looking at USD ZAR, and I had a trade running on Friday. I actually killed. actually killed USD. I don't know if I have the screenshot. Okay, I did not save it. No, I did not save the USD screenshot. So this was what I was looking at on the USD. As you can see on the 1 minute, it was just a mess. I even told the guys in the signals group that, you guys, this is a mess. Yeah, so you can trust the direction of the 15, 18, and 100 strategy, but what you cannot trust is how the market is gonna play, guys. Yo, the market will play around, but that's how it looks for us for this past week. Yeah, I'm out.